Welcome to FXcast. This is our FXcast market analysis video for Friday, May 19th. In each of our video, we try to find high probability trading setups. We evaluate the gold chart and compare it to the popular currency pairs. We come up with a low volatility watch list, an insight bar watch list. We review the economic calendar, and we have an education spotlight at the end. With that said, let's pull up the charts. Okay, we are starting off with the gold chart, and you can see what we've been looking at on the daily chart. We have our uptrend and we have our downtrend, and if you zoom on in, you can see that our current session candle has made its way out. However, we're still below the 20 moving average, so I still want to see us move above that if we're going to move higher. You can see on our market profile that we are, well, let's reapply that template. There you go. You can see that we are trying to get above all this congestion. So we really consolidated today. And look at yesterday. When you combine all that volume, it's we're stuck. But as we move a little bit higher, we can start to see ourselves getting above the 20 moving average with a possible move. If not, to test this wick and this wick. But also to test the past swing high. So that's what I'm watching for. I'm glad to see that we're out of this triangle, but now I want to see us move over to 20 moving average. Now, when we bring up gold and compare it to our currency pairs, here's the pound dollar, and our uptrend line that we drew, we're still holding on to that. We keep breaking it, but what does it say? What does it say when we see these wicks? Value. And that's what market profile is all about. And so buyers are saying there is value down here, and so they keep coming in and bringing price right back up. So until we get a close, and this is also a great, education spotlight that we'll have to do, that the wick doesn't tell the story, the close of the candle tells the story. And right now, the story is there is value below our trend line. So we can't really go all out shorting. You may try to scalp that, but I would not try to trend that. So I'm still sitting on hands, waiting for that to tell me what it wants to do. Now the good news is we created a vacuum. So that there's two things. We can keep moving up higher, which would be fine. So we need to get above 16235 to move higher. The bad news is if we do not, because this is a vacuum, then we should fall right back down to the point of control. Now we are looking at gold and the Aussie dollar. Aussie dollar in that same triangle, and we're still in it. Still trying to get above the 20 moving average. If we get above the 20 moving average, maybe we'll run right on up. We'll bring up the hourly. And look at that. We see the same thing. Heavy congestion and needing to get above one... what do we need to get above? We need to get above 106.70-ish. To get above this congestion and move higher. On the daily though, where's that 20 moving average? Basically the same area. How about that? Why are we wicking there? So you can kind of see why that is the top of our market profile. That's where the 20 moving average is. So just like gold, we need to get above the 20 moving average to really see where we want to go. Bringing back up gold. And now switching over to the euro dollar. So here here's gold, and then here's the dollar trying to get back into this rhythm. The euro dollar has been weak a lot because of the debt concerns, but we've made a nice little rally back up to the 50. We talked about this last night. If we break here, can we run all the way up to the 20, and which is what it looks like we're trying to do. So at that point, if not already, we have to watch for a couple of things. First, we have to watch in this area for our wicks. And secondly, we have to watch whether or not we're putting in that lower high. Will the 20, just like the 20 is struggling on the gold and struggling on the Aussie dollar to break through, will this 20 be the resistance for the euro dollar? So we need to pull. Let's pull up. Okay, here we go. So we can see a lot of volume in here, and again trying to get above that volume. And if we get above these wicks, then a run to the 20 moving average is likely, which is exactly what we talked about yesterday. But then I would sit on his and see, well, if gold's not getting above the 20 and the Aussie dollar's not getting above the 20 moving average, maybe the euro dollar will not also. We are also continuing to look at the euro pound. We basically have on the daily a sideways up pattern trend. We've had some wicks above, and we've continued to close above the 20 moving average. So we want to see this trend continue, possibly to hit 88.95 and then touch the high of the past swing high. Let's pull up the charts and take a look. Okay, our first trade, we are once again looking at the euro pound, and we talked about we're above the 20 moving average. We talked about getting above this wick here from 2 sessions ago, and if you wanted to, we can draw our uptrend line here. That's great, and we can draw a downtrend line. And you kind of get an idea that where we're trying to break out from. Now, we still have the resistance here at 88.45, and then we have another target here, 89.05, and then even higher. So again, your risk, your risk tolerance, your money management skills really can tell you where you could get in. So there is an aggressive entry coming up here at about 88.25-ish. There's a little bit more conservative entry up here at 88.45. And then another target up here at 89.05. We can see on market profile that we consolidated today. Today was a nice day of consolidation, and we are trying to get above all this consolidation. And if we can get above this wick here, which is up here at the 88.45 entry that we talked about, we should be smooth sailing. We are continuing to monitor the pound yen. Again, we have a sideways chart. We also have a descending wedge here, and that is a theme of tonight's trades. We have a lot of descending wedge that need to resolve itself to the upside, to the downside. Let's pull up the charts and take a look. Another of our old friends here is the pound yen. And when we look at market profile, I mean, you can just look at all this volume right here. Look at all this volume right here. And we just basically sat here. What we're watching here is this descending wedge. You know, this is like our third one that we're watching, and we've been watching it snake around the 200. And when we go down on a smaller time for this one, we can kind of see this choppiness action. So, you know, again, we're getting closer to the apex where this has to break out one way or the other. We just want to continue to bring it to you, because what's important is that it should have a good move once we break the trend. Okay, so we are still looking at our dollar franc on a daily chart. We have the sideways, the down trend. We have an inverted shoulders. We have a descending wedge. So again, we're trading next 2 ways. We definitely have been consolidating in the past couple of days. So our target remains the same. Let's pull up the charts and take a look. We still have our old buddy, the dollar franc. We've been watching this for a couple of days. We got a false trigger today. We're looking for this descending wedge, inverted head and shoulders, however you want to label it. We're looking to trade a breakout to the either side, and we did get a wick below it today. And actually, if you come down to the 4-hour chart and look at this, you can see this consolidation that we've been in for almost a week. You know, minus this little hiccup out and back. For about a week, you know, we've been in between 87.79 and 88.89. So, and heck, if I just raise this up, you know, we've been in this range for that whole time. So, there's definitely a range that we have to watch. And these wicks certainly are showing us one thing, and that is value. And when we come over to market profile, that's exactly what we see. This is our point of control. This is where our heavy volume is. So, buyers are finding value here. So this goes to what we said, that the close of the candle tells the story. So we don't just want a wick. We want to close below this 88.79, and we have a trade to the downside. And finally, we have the dollar yen. Also in a descending wedge pattern. It has already broken the extreme downtrend that we're in, as you can see. And now we're sort of making a rising 3 pattern at the 50 moving average. So we want to see if we can close above that 50 exponential moving average and make a run for the 200 moving average. Let's pull up the charts and take a look. Last trade we're watching here is the dollar yen. And what we're basically watching is the break of the 50 moving average. We got a false breakout today. Want to see if that happens again. You can see on the market profile where the volume is picking up here, and we've accumulated a lot of volume. And to get into the next auction area, we need to get above 81.70. Probably safer will be 81.75. However, on the daily, that does not get us above the 50 moving average, which is basically at 81.80, 81.83. So we want to continue to watch this. We can already see that, depending on how you want to draw your lines, if we went with this, we can see that the dollar yen has already broken out of this tremendous downtrend. It's already put in a higher low. We moved up, higher low. And now we want to see what it's going to do here at the 50 moving average. As we drop down, we're going to see anything here. Oh, well, as we drop down, we can see to the 4-hour chart, we can see that the 20 to 50 are now trying to hold up a support. The 20 has crossed above the 50, so that certainly is a little bullish. So should be interesting to see, again, what we can do once we get above the 50 moving average. Okay, right now, setting up for our low volatility watch list is the dollar Canadian, the euro yen, the pound yen, and on the inside bar watch list, we have the pound Aussie, the pound dollar, and the New Zealand Canadian. Let's go take a look at the economic calendar. As we pull up the economic calendar, we can see a couple things. First, on the yen, we have an industry release that basically sums up the production in all the sectors in the Japanese economy, so we can see some lagging. This also will help give some indications as far as to Japan's GDP and overall growth figures. We have inflation data in Germany with PPI. We have inflation data in Canada with CPI. And then we also have retail sales here in Canada. As we end our week and our focus on developing a trader's mindset and the fears that block us from that from Dr. Rand Howe, the last one ties in it yesterday, which is the fear of growth and change, the fear of getting out of your comfort zone. Believe it or not, some people want to lose. Some people will rather complain about losing than actually do the work to fix themselves to be successful. The theme of all of this whole week is that you're not going to develop the trader's mindset. You're not going to overcome your fears by having a new indicator, a new trading system, or a new video to watch. You overcome those fears by finding out who you are as a trader, defining who you are as a trader, and then finding a trading plan, a trading system that matches who you are. It links up who you are as a trader with your investing goals. Thanks, guys. Have a great weekend, and I'll see you next time.